Tell us a little bit about this Liberty Media guy, Michael Zeiser.
Yeah, it's an interesting story. They hired Michael Zeiser late last year. You're right. He's a guy who worked for Liberty Media, which is known for its big media and telecom investments, but they also have some e-commerce investments, and he had led that strategy. He used to be on the board of Barry Diller's IAC. Now, before he had come to Alibaba, Alibaba was already making investments in U.S.-based companies. They had invested in Fanatics, which is an online sports retailer. They got some headlines for investing in ShopRunner, which is run by the former Yahoo CEO Scott Thompson. But since Zeiser's arrival, they have really been ramping up with some of these investments. They invested in Lyft. They invested in First Dibs, which is a commerce company. They invested in the parent company of the messaging app, Tango. Expect more of this, Emily, because they really want to be in that conversation of being, you know, an eBay or Amazon-like service on the road to trying to generate in the neighborhoods of, well, a lot of money, 15, 20 billion maybe revenue long term.
And as we've talked about many times, many U.S. technology companies have failed to get into China, eBay and Amazon among them, though not for lack of trying. Cory, what do you make of the investments that Alibaba is making in U.S. companies and, you know, moving onto U.S. turf?
Well, let's see what kind of business they actually try to get here. I mean, one of the things, this run-up to the IPO has given them the opportunity to try some new things as they get into that. And we'll see also the way that they report this when they file. We're expecting a filing any time now. And if that filing will be interesting to me in part because we'll wonder if some of the results from some of these companies that they've acquired or made investments in will be rolled into their trailing results. As you can imagine, you know, companies quite often will not give us their organic growth rates. They'll buy a new company and then they'll say, oh, that's actually organic now from now on. We'll count that as part of revenues. It'll show faster revenue growth when they're buying these things if these things actually have some revenues.
Could some of these investments, John, lead to outright acquisitions they have in China?
It almost seems like they're testing the water. I mean, the easy thing to do is to buy stakes as opposed to doing full acquisitions right now, because that regulatory or that overall government issue. So you get someone from a company like Liberty that's used to making purchases of stakes, and then you take it from there. But you have to think, absolutely, that could be the plan.